As we all know, bank is an indispensable player in financial system and contributes the most in the economic growth of a country. Vietnamese banking sector is changing and improving every moment recently because of globalizations. Techcombank, one of the most developing commercial bank in Vietnam, has gained credit from Vietnamese people. Therefore, the purpose of this report is to analyze Techcombank performance in recent years through different aspects. This presentation is divided into 5 parts: introductions, analysis of bank performance, bank risk, bank capitals, and bank loans. In the first part, I will introduce an overview of Techcombank and its main service. Techcombank, or Vietnam Technology Commercial Joint Stock Bank, is one of the largest commercial banks in Vietnam, born on 27 March 1993. The foundation of Techcombank started with a humble sanctions capital of 20 billion Vietnam dong, and underflying base camp was arranged on 24th Lê Thương Kiệt Street, Hanoi. With one administrative center, 2 agents workplace, and 314 branches in 45 regions over the nations, Techcombank addressed issues of common banking and ensured the budgetary security requirement for Vietnamese people. About the finance situations, in 2019, Techcombank is the only bank present in top 3 private enterprise gaining best profit. Moreover, JP Morgan financial institutions recognize Techcombank as the bank with the highest return on assets in the Vietnamese banking system. From time to time, Techcombank is recognized with many awards, especially top 10 out of 100 Best Working Place in Vietnam 2018 by Alphabet and Nelson, Best Banking in Vietnam 2018 by Euromoney, and Best Commercial Investment Banking in Vietnam by Global Banking and Finance Review. There are 4 main services of Techcombank. The first is personal banking. Techcombank supports individual customers with personal banking service focused mainly on retail activities. The second is corporate banking. Techcombank ready to support business development with diversified and flexible business loan products and stable credit source. The third is priority banking. The VIP customers of Techcombank can use priority product packages such as savings, current accounts, cards, and loans. The final is the investment banking. Techcombank investment banking service consists of 2 subsidiaries, the Techcom Security and the Techcom Capital. In order to evaluate Techcombank financial performance, this report focuses on 2 financial aspects, including the profitability ratios and tracking Techcombank stock price behavior. The first ratio to be looked to is return on assets. Return on assets is the pointer of how well an organization uses its resource by deciding how beneficial an organization is comparative with its total asset. As you can see on the chart, the return on asset index also witnessed a steep growth from 2015 to the end of 2018, from 0.8% to 2.9%. However, there was a slowdown from 2018 to 2019, which the rate remained as 2.9%. One of the explanations for this might be that by the end of 2019, the bank was affected by the COVID-19 epidemic. Nevertheless, compared with other finance institutions, Techcombank went into the current COVID-19 situations as one of the most profitable, fastest growing, best capitalized, and conservatively levered bank, which shown in this chart. The second ratio is the return on equity, is a proportion of the paid return streaming to investor, and is likewise approximate the net advantage that the investor have gotten from putting their capital in the banks. Another formula shows the relationship between the 2 benefit proportions relating the equity multiplier. The equity multiplier is the proportions of the monetary risk level of finance institutions or banks. From this table, we can see that the multiplier is encountered a decrease from 7.414 to 6.138 times. It demonstrates that the less debt used to fund the bank resource, the lower financial risk it is, and additionally decrease the return for investor. Techcombank effectively control the expense and boost the income by development of net profit margins of 1.305%. Altogether, the return on equity of Techcombank has sunk by 3.7%. Consequently, the revisitations of the holder of the offer will be altogether lower than that in 2018. This report also decayed Techcombank income into two particular sources, interest income and non-interest income. Subsequently, the fingering of two income pointers were performed and the outcome were the net interest margin and net non-interest margin. Such a breakdown can be advantageous in clarifying the progressions which monetary establishment like bank needs to encounter through the whole financial year. We have this chart and this table here. And we can see that in the first quarter of 2020, non-interest income increased by 109% over the same period in 2019, reaching 1,682 billion Vietnam dong, accounting for 30% of the revenue structure. Last year, this segment increased 32% and also accounted for 32%. Price to earning is the most essential strategy which estimates whether the valuations of a stock is fittingly comparative with income. Techcombank listed on the stock exchange in June 2018 and closed the first sessions at 102 and 400 Vietnam dong per share. At the beginning of 2020, the price to earning of Techcombank will witness a sharp diminishing from 8.17 in the fourth quarter of 2019 to 5.02 in the first quarter of 2020, and it is believed that it is due to the COVID-19 pandemic. The first risk we will mention here is credit risk. In financial institutions, non-performing loans proportion is one of the main credit risk pointers uncover the current issues of bank executions every year. The denominator of non-performing loans resource show the income-producing resource including liabilities which are over past due 19 days or more. So you can see that the non-performing loans ratio Techcombank over the past 4 years has remained stable below the level of non-performing loans regulated by the central bank of 3%. Especially the index in 2019 reached a trough at 1.3%, lower than the average of non-performing loans of all banks at 1.4%. This indicates that the quality of the credit has been improved and Techcombank is doing very well with the policies to write off the bad debts. The interest rate risk is the risk that characteristic of any financial intermediaries when there is a time difference between the capital source and the use of capitals. The interest-sensitive gaps or dollar gaps is one of the most generally well-known interest rate supporting technique utilized in risk management of changing interest rate risk. The formula will equal interest-sensitive assets minus interest-sensitive liabilities. The durations gap are likewise suggested by the Basel Committee to make a normalized model which can be utilized by the administrative expert for evaluating the bank's presentations to interest rate risk. The formula will equal durations of assets minus durations of liabilities multiplied by the total liabilities over total assets. It tends to be plainly observed that Techcombank has a positive dollar gap, so the interest rate in the USD expand by 1.5%. However, the profit before tax and investor value decreased by 100 and 159 million Vietnam dong and 85 and 727 million Vietnam dong respectively. Unexplained for these negative numbers can be explained by the effect of COVID-19 at the end of 2019 to the volume of foreign currency. On the other hand, the interest rate in Vietnam dong rose by 3%, prompting to the development in profits before tax and in investment value. Then again, the interest rate gaps changed during the time frame. However, altogether, the sensitive assets are bigger than the delicate liabilities. Therefore, Techcombank in general will be at higher danger with falling rate, prompting the reductions in overall revenues. Liquidity risk is characterized as the risk that happens when a bank might not be able to satisfy momentary financial needs from its client. The risk will in general emerge under two principal conditions. The first is the bank experiences difficulty satisfying the needs for unexpected and enormous volume of money withdrawal from its contributors, or the bank needs to activate assets in a brief time frame sketched to satisfy such commitment. And we can see that it is clearly observed that there was a slight fall in the cash proportions from 15.18% in 2018 to 14.59% in the next years. Because of the modest development in total assets, the bank has stable liquidity positions in the past 2 years. Techcombank additionally utilized the strategies for partitioning liquidity assets and liquidity liabilities by various developments, which could help the bank in setting obligations on scheme. The first to look up in capital management is the Basel I. Basel I is a set of worldwide bank guidelines about least capital necessity of financial institutions with the objective of limiting the credit risk. The Tier 1 capital is the accessible sum that can undoubtedly retain the loss that bank needs to endure. The total risk-weighted asset is inferred dependent on each item in both on accounting report and balance sheet. And we have the formula here. Tier 2 capital, known as supplement capital, for example, remittance for advance and rent loss, mandatory convertible debt, subjected obligations, capital instruments, intermediate terms, preferred stock, and so on. And we have this formula of CAR ratio. The bank with a good capital level is the one with a CAR which is better than 10%. Look at this table. We can see that the Tier 1 proportion of Techcombank was 8.16% in 2016, and in the following years, the proportion has expanded only an obstructive sum by 0.64%. The development in Tier 1 can be clarified by the new issue of 70 million offers to the current investor in 2017. In mid-2018, Techcombank had effective IPO in Ho Chi Minh City stock trading, hence raising the capital up to 20,000 billion Vietnam dong, and as expressed in vneconomy.com. This event led to a dramatic rise in Tier 1 ratio in 2018. The CAR ratios from 2016 to 2019 fluctuate from 30% to 40% and remain stable and can be classified as a good capital level since CAR is above 10%. The high and stable CAR indicates that the bank is safe and can fulfill its financial obligations. Because of the restrictions about the separation of risk in Basel I recently, the CAR ratio just depends on the credit risk, while the different risks like market risk and operational risks are totally disregarded. Therefore, the Basel II requirement is made intended to improve the reaction of Basel I. And as we can see here, there is 3 pilots of Basel II. That is medium capital requirement, the supervisory review, the great public disclosures. In Basel II, the bank also maintained the leading capital positions in Vietnam with a capital adequacy ratio at the end of the period under Basel II of 16.6%, more than double the minimum requirement of Pillar 1, Basel II, and higher than 55% as of December 31, 2019. Moreover, Techcombank has been approved by the State Bank to have a new credit growth limit of 13% compared to the previous one. About the lending structure, as we can see that There is a significant increase in the amount of loans in Group 1 and Group 5, especially in Group 1. The key point here is that bad debt must be written off as uncollectible, a debt within Group 3, 4, and 5. By observations, the amount of substantial debt and doubtful debts had been decreasing after years, and this shows a well-performed in terms of lending management of Techcombank, even though the number of lost debt had increased slightly about 0.05%. In conclusions, to apply the hypothesis of bank management costs into practical bank, some essential part of Techcombank activities, for example, bank performance, bank risk, capital administrations, and bank loans, are painstakingly examined. We can infer that Techcombank profitability proportions are pretty high, and stimulatively, the bank control costs adequately. Furthermore, the bank has explicit methodologies to oversee credit risk and liquidity risk in requests to limit the risk exposures. Likewise, the bank has higher capital sufficiency proportion than the guideline of State Bank of Vietnam, and furthermore, it keeps the bad debt proportion underneath 2% with a prudential credit strategy. Finally, with Techcombank, the continued deployment of new products promoting bancassurance or bond insurance operations will contribute to maintain high growth rate of the bank.